2 decades ago, the Barker Review warned of inadequate supply, price volatility, and growing unaffordability. But 21 years later, nothing has improved. If anything, the problems are deeper. At the heart of the crisis is simple affordability. The average home in England costs £290,000, while the average household earns £37,000 a year, a ratio of 7.7. So for most people, buying a home now requires either family wealth, risky borrowing, or years of saving for a deposit. No surprise that home ownership rates have fallen in recent years from 74% to 65%. The ONS note that only the richest 10% can afford a home on 5 years of salary. And renting is even more difficult. Private tenants already spend a third of their income on housing, with rents rising faster than inflation. The result is a system that widens inequality and threatens to divide society. Now, actually, the past 12 months have seen a small improvement in affordability, but this barely dents the long-term picture. The ONS shows that affordability today is worse than in 2004 and more than twice as bad as it was in the 1970s. Importantly, not all regions are affected. There is a huge variation in the country. In Wales and Northern Ireland, homes are relatively more affordable, while London and the South East remain the epicentres of a crisis. In northern towns such as Burnley and Blackpool, the affordability ratio is just 3.9. Compare that to, say, Kensington and Chelsea, where it's 27.1. This regional divergence reflects, though, a wider divide in the UK economy. The housing crisis is most severe where growth and employment are strongest. That in turn creates a vicious cycle. Areas of high opportunity, often the least affordable, effectively shutting out those who don't already have wealth. For graduates and young professionals, it means an unenviable choice: move to London and pay £2,000 a month in rent, or stay in a more affordable town and struggle to find a decent job. Yet this imbalance also points towards a partial solution. If the economy could be rebalanced away from London, directing investment and high-quality jobs to where housing remains affordable, it could ease the pressure. At the same time, building more houses in areas of strongest growth would help reduce those bottlenecks, driving prices ever higher. But London is experiencing a crisis in construction. In the first quarter of this year, just 347 affordable homes were started. In the second quarter, new starts fell by 59%. As the Evening Standard reported, residential development in London has stopped. It no longer happens. Of 1,400 development sites, only 16 have actually begun construction. Since 1997, house prices have quadrupled, whilst incomes have merely doubled. Compared to other advanced economies, the UK faces one of the largest housing shortages, estimated at more than 4 million homes, and the UK has the lowest ratio of housing stock relative to the population and the most expensive housing. But if prices keep rising, why doesn't supply respond? Well, there are 7 reasons. Firstly, that post-war building boom was helped by large-scale social housing programs. Yet since the 1980s, around 1.7 million council homes have been sold off, with very few replacements built, and this loss of stock has never been made up. Against this backdrop, the government's target of 350,000 new homes a year looks increasingly ambitious, to say the least. Secondly, private construction firms are profit-driven. They have little incentive to build rapidly when drip-feeding homes into the market sustains higher prices and more profits. Many developers prefer simply to sit on land with planning permissions, waiting for conditions to maximise returns rather than fixing the housing crisis. Third, the cost of building itself has risen sharply. Since 2000, the building cost index has increased 140%, outpacing general inflation. Estimates suggest that to build a 3-bed house in the UK can cost anywhere between £240,000 and £363,000. London in particular is now ranked as the second most expensive city in the world for construction. London has a huge backlog of ghost sites. More than 280,000 homes have planning permission, but remain unbuilt. Developers will point to new regulations and bottlenecks at the building safety regulator, whilst also citing weak demand and tough affordability housing requirements that reduce profitability. And even when developers do want to push ahead, projects can still be blocked or delayed by local councils. It's very hard to overcome the NIMBY reality in the UK when it comes to housing. Now, one solution is greater flexibility in building. London City Hall have approved modular housing that's built in a factory with much lower costs and much quicker to build. I mean, it is kind of ironic that generally the housing sector uses the same labour-intensive methods as the Victorians hundreds of years ago. Also, quite important that since 2004, the UK population has increased faster than expected. An extra 8.1 million people, 6 million of those due to net migration. This has increased the number of households, but at the same time there's been no solution to the backlog of a housing shortage. And this housing crisis has influenced housing formation. If you can't afford to buy or rent, young people live at home for longer. Bad news for young people, not particularly great for parents either. The collapse in the UK fertility rate does mirror global trends, but if people find housing expensive, it's definitely a factor in delaying family formation. And even if people do get married or settle down, the cost of buying, say, a 4-bed house rather than a 2-bed is a factor in encouraging smaller family sizes, basic economics. Now, ironically, the UK housing market does have an issue of under-occupation. In 2023, 72% of households in England had at least 2 bedrooms more than they needed. This is often single old people who find it difficult to move and downgrade. And this highlights another structural problem for the UK housing market. It's difficult, stressful, and costly to move. Higher stamp duty is definitely a factor in discouraging people to move, but also in a survey, people cite the stress and costs of moving, and I'm sure if you've moved, you can relate to that. The UK process is archaic, time-consuming, and one of the worst in the world. In the UK, the average time is over 6 months, compared to just 69 days in the United States, and this only increases the inefficiency of the housing market. But also, while some homes are over-occupied or even empty, the private rented sector has become a nightmare. 8% are overcrowded, insufficient bedrooms to avoid overcrowding. Rents have risen remorselessly in recent years, yet many landlords are still pulling out of the sector. We are seeing a big shift towards bigger corporate landlords, but the fundamental problem is that the sector hasn't kept up really with a growing demand, creating that price pressure. There are very long waiting lists for social housing and a big rise in homelessness. In terms of temporary accommodation, England has become something of an outlier. A high rate of people sofa surfing or being placed in B&Bs by councils. Latest figures suggest that local councils spent £2.8 billion on temporary accommodation, a 180% increase in the past 5 years. That includes £844 million spent on emergency B&Bs and hostels. It's the most inefficient use of government money, fighting crisis firefighting rather than a long-term solution. Despite freezes to housing benefit and the 2-child cap, the amount spent on housing benefit is much greater than in previous decades. It mirrors a shift from funding building new houses to funding benefits. Despite the total bill rising, the real value of housing benefit is actually falling behind market rents, meaning that the share of private rental properties which are affordable is lower than in the past. Now, one solution often touted is for the government just to build more council houses directly, rather than through subsidising housing associations. The benefit is that government ownership would lead to income revenue for the government rather than letting the private sector benefit. Now, in theory, you could argue the government can borrow cheaper than the private sector, but the government's dismal finances, rising bond yields, have made them reluctant to take on even more borrowing than what they're doing already. And I might say, well, are there any improvements in the housing market since 2004? Well, some recent relaxation of planning regulations have seen some greater interest from builders. It may help to increase building to some extent, although many builders are actually disappointed in the changes aren't as much as they hoped. Secondly, since the big crash of 2008, we haven't seen a repeat of that very bad volatility of a boom and bust. The 2022 increase in interest rates did cause a mini dip in house prices, but it was relatively mild compared to 1991 and 2008. And you could argue that this is because post-crash, new regulations have introduced stricter stress tests, which means that borrowers had to prove they could pay more if rents went up. And so when interest rates did increase, it didn't cause a big rise in delinquency or arrears. Also, there's been a move from variable mortgages to fixed rate mortgages. And for all the problems of the housing market, it is worth pointing out that since the COVID boom in 2021, house price growth has really moderated in recent years. In fact, real house prices have fallen since 2009. And you could argue the problem is not so much the housing market, but poor growth in real incomes. Now, the hope would be that a limit on house price growth could be maintained for several years to slowly improve affordability. You're not going to see a big crash, and big crashes, of course, also have their own problems. But the problem is that with affordability really stretched for many people, there's always a temptation to resort to relaxing mortgage restrictions and encouraging bigger mortgages, which does help a few, but at the cost of bidding up prices. Another factor that's become more important since 2004 is the growing importance of wealth and inheritance in propping up the housing market. You might well ask, what explains the long-term rise in house price to income ratios? Partly you could say more women working, so many couples have a dual income, whereas in the past they didn't. But another part is that people are using more than just their income. They are using wealth or gifts from their parents, things like that. In other words, rising house prices leads to more wealth, but is then recycled back into the housing market, pushing up prices and income multiples. But this raises the obvious problem, that it increases inequality between those who inherit and those who do not. And it is becoming a big divide that's really quite a problem in society. It means that many people are also becoming homeowners much later, say in their 60s when they finally inherit, rather than their 20s and 30s. Despite recent figures for net migration coming down from the very high levels of 2023, the UK population is still forecast to increase in the coming years. So there's no easy solution, because no matter how many targets you have, in reality it always proves very difficult to build more. The greater imagination is needed. And you could argue there's a good case for treating it like a national emergency, like in the post-war period where a lot of houses have been bombed out and the government did radical things like prefab housing were put up to provide immediate need. Many of those prefab housing still working in Oxford 60 years later. It was supposed to be a temporary solution, but it's become a permanent one. We do really have to find a way to build houses cheaper and in greater numbers. So maybe with 3D printing, modular housing, it's still a relatively unexplored avenue. But the problem is not just the housing market, it's also the wider economy. With stagnation in incomes, dire government finances, it makes it much harder to fix housing too. So check out this video on the difficulties facing the UK economy. Anyway, see you soon. Thanks for watching, and do consider subscribing.